Welcome back for my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Wednesday, the 25th of March, looking at dollar yen. Now, I've been talking about how dollar yen in the past few days has just started to dissipate its rally. The impetus of the run higher has started to wane, and that is really starting to show through on these candlesticks. We've got the small real bodies of these candlesticks. Yesterday's candle was almost a perfect doji candle, but look at the long lower shadows. That suggests on each session you're getting this selling pressure that's coming through but just can't quite make it in terms of sort of getting into the meat of a correction. So we've got these momentum indicators now. Stochastics beginning to roll over. RSI has been hovering around that 60 mark for the last 3 sessions now. Is this sort of the rally that's starting to lose its pace and lose a momentum and start to roll over? You've got this hourly chart here, which you can see. I'll go back to the beginning of the rally. It's been basically just biding time and moving sideways. Yeah, it's posting these little higher lows, but it's not really decisive, and the moves have started to show through on the consolidation of this hourly RSI, where between 40 and 65 MACD lines, a shade above neutral but barely above neutral. And it's interesting. Is this the point at which we start to see the rally rolling over? Well, at the point at which we start to see these higher lows starting to be broken is, I think, where we start to see that correction building. So 110.75 has been today's low so far. And if that is broken as support, then I think we can start to see the market rolling down. 110.50 is where the support of that uptrend comes in. It's a much better defined uptrend on the hourly chart than it is on the daily chart, because you get issues of how the candles are spaced, etc., etc. So it's a much better definition of the uptrend on the hourly chart, and I think that is the one you really need to be following. And that comes in at 110.50. So a breach of that would again be a suggestion that the market is rolling over. A breach of 40 on the hourly RSI, again a suggestion that the market is turning corrected. Below neutral on the hourly MACD, again another indication would be that that market is starting to sort of roll over. Not any confirmation yet, and it's just a consolidation for now. But these long lower shadows without the decisive positive real body is really sort of beginning to ask some questions, I think, of this rally. Resistance is starting to form around that 1160 mark. Yesterday's high, 1170, 1160, 1170 seems to be the area where the resistance is coming in. Again today, 55, 56 being the day high. So underneath that 112.20 area as resistance. So question marks surrounding the pace of this rally, and I think below 76.4% fib, 109.60, that would really suggest the market is turning corrective. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.